I'd like to introduce our final set of opening remarks from Michael Schlein, the CEO of Accion International. Michael has been the CEO of Accion International since 2009, and he was previously the president of Citigroup's International Franchise Management and the Chief of Staff at the U.S. SEC, Securities and Exchange Commission. In addition, Michael is a good friend, and I've had the pleasure of working with him for many years now. So welcome, Michael, and thanks for your support.
Really great to be with you. Let me first start off and thank Mr. Sarkar for joining us here today. And as co-chair of GPFI, you play a critical role in driving the Financial Inclusion Action Plan, expanding digital financial services and making financial tools available to small and medium enterprises. Our work at Accion and the Center for Financial Inclusion is highly aligned with your vision. We thank you for your leadership, and we also look forward to your leadership over the next 3 years. Let me also thank Her Majesty Queen Maxima. I don't think I've ever heard any introduction of Queen Maxima that doesn't use the word tireless. She is so hardworking. She travels all over the world, and she is truly inspiring. And thank you to Pavan Bakshi, representing the Bill and Melinda Gates Foundation. The foundation has been an incredibly positive force for good, and in particular for financial inclusion. Let me thank each of you for taking the time, many of you traveling great distances, and really over the next day and a half, sharing your knowledge, engaging in this conversation. I think we all share a common vision of a responsible, inclusive, and resilient financial system, one that better serves and protects consumers everywhere, especially those who have been left out for far too long. The way we're going to succeed and create that fair and inclusive world is by coming together and sharing the best ideas, and that's what the RFF is really all about. Eduardo described some of the history, but GIZ, CGAP, IFC, the Netherlands Ministry of Finance, the G20, the roots of the RFF are, it's an incredible lineage, and this is a very important institution in our field, and as Eduardo described, we were very honored when the IFC transferred the convening role to the Center for Financial Inclusion at Accion. India is the epicenter of inclusive finance. Several years ago, nearly a decade ago, I was on a panel and I was asked to name the 3 most exciting things going on in financial inclusion, and I said, India, India, and India. And I think I was understating things. The innovation, the enormous progress that we've seen here over the past decade is remarkable and is truly an example for the rest of the world. Universal digital IDs for 1.4 billion people, the India stack, UPI, APIs, eKYC, eSign, the digital locker are just a few of the elements that have all come together to really accelerate the financial inclusion revolution and really truly inspire so many around the world to follow. And it's working, Pavan mentioned that UPI today is already doing 9 billion transactions per month. But by 2026, UPI may hit 1 billion transactions per day. It's extraordinary. And again, you get the feeling that we're just getting started. Now, not all of you may be familiar with Accion. We're a global nonprofit committed to building a fair and inclusive global economy that works for everyone. Today, we're the leader in the world in seed stage investing in fintech for inclusion. These are all seed level companies, early stage companies harnessing extraordinary new technology, all allowing us to reach people. The number of, we were talking before about 1.4 billion people being completely left out. We focus more on 2 billion because it's not just the people who've been left out. There are hundreds of millions who continue to be poorly served. So All of these companies are leveraging everything from AI to satellite imaging. Collectively, we're trying to deliver faster, better, cheaper, and safer financial services for 2 billion people. This is at the seed level. With our partners, we helped create Quona, which is focused at the Series A and Series B level, so slightly larger, but same thesis, fintech for inclusion. And the real innovation was we created the world's first global fintech fund for the underserved. Like we did in microfinance, we're trying to show that you can have a huge impact and also generate attractive returns, because that is how we're going to move the capital markets and get the capital markets to focus on those 2 billion people. Between these two portfolios, we now have 7 unicorns, that's 7 companies that have been valued at over $1 billion. We also invest in banks and microfinance institutions, all that are digitally transforming. And we have a team of Global Advisory Solutions, GLASS, which is about 50 people that are experts in the digital transformation of existing banks and microfinance institutions. And of course, I'm especially proud of our role in creating the Center for Financial Inclusion. It is housed at Accion, but it is an independent think tank that builds strong partnerships, conducts rigorous research, tests emerging solutions, advocates for evidence-based change, and of course, convenes important gatherings like this one. We are gathered here at an incredible moment. In our lifetimes, we have seen the greatest reduction in global poverty ever in human history. Literally, over the last several decades, hundreds of millions of people escaped poverty. But for the first time in any of our lifetimes, those trends are now going in the wrong direction. For the first time, we're seeing increases in poverty, economic distress, rising prices, hunger, food insecurity, increasing migration. It's all exacerbated first by the pandemic, but now climate change and, of course, war. This, of course, hits the poor the hardest, especially smallholder farmers, small businesses, and women. All of this was recently confirmed by the World Bank, which shared its biannual economic outlook. It's a sobering outlook. They predicted a slowdown for the rest of this year as the impact of higher interest rates in rich countries really ripples out to developing countries. The most vulnerable countries are facing potential debt crises. Globally, we're significantly off course to meet the UN Sustainable Development Goals by 2030. Now, all of that may be a bit bleak, but I remain incredibly optimistic. We are living in a digital revolution. It is changing all of our lives, and it's especially relevant for how we can reach those 2 billion people. It used to be that when you tried to reach a rural farmer, the distances were insurmountable. Today, there's no such thing. It used to be that the transaction sizes were too small to be commercially viable. Today, there's no such thing. It used to be very difficult to remotely know your client and know what she needs in terms of products and services. But today, with data and data analytics, we can know what she needs and provide the right tools to help her. All of that has changed in just frankly the last several years. For many of the people in this room who've worked tirelessly to help reach the poor, for the first time, we have a whole new set of tools. It's very, very exciting. And the pace of innovation and digitization continues to accelerate. The Global Findex showed that in the last decade, more than 1 billion people were connected to for the first time to the global financial system. In developing economies, we went from 42% of adults to 71%. That is remarkable progress. And then during the pandemic, it felt like overnight, we made another decade of progress. For example, 166 countries, which is nearly all of them, created more than 400 cash transfer programs that reached over 1.1 billion people. For many, this was their first time in switching from cash to digital. These are the new digital payment rails, and we can build on top of them to support the higher value financial services like savings, insurance, and credit. Though the pandemic was awful, this acceleration is very, very exciting. And now we have evidence that payments are in fact a key first step toward creating a more inclusive world. The Findex showed that 4 out of 5 people who received a digital payment also made a digital payment. And of those making payments, 40% of them saved formally, and 40% of them borrowed formally. This is a very, very significant turning point. We're moving from access to usage. We're seeing that payments are really helping us to unlock higher value financial services. And as more people do go digital, the data they're creating is allowing us to see and serve people who have been ignored for far too long. The invisible are, for the first time, becoming visible. New technology is enabling us to create extraordinarily innovative tools designed to meet their financial needs. We can provide working capital to help grow a business and tools to help manage that business. We can protect a small farm from floods and droughts, and we can help a worker save for her child's education. Now, if you put all of this together, with growing poverty, the work of everyone in this room has never been more urgent, and with growing digital innovation, our impact can be greater than ever. So I really see this as a once-in-a-lifetime moment where we need to seize the day, and if we do this right, we can emerge from the pandemic and accelerate the creation of a much more inclusive world. But digitization also comes along with new risks. And let me emphasize the word responsible in the title Responsible Finance Forum. We are dealing with the most vulnerable people in the world. We need to do everything we can to give them opportunities in a way that protects them. As we move more and more online, we risk leaving many people behind. Those with limited digital and financial literacy face particular challenges. They are the most at risk of fraud and scams. Fraud has increased significantly during the pandemic, and the fear of fraud is one reason that people hesitate to go digital. According to CGAP, we've seen a tremendous rise in consumer data records being exposed and the near doubling of fraudulent mobile app transactions. And while the increasing use of algorithms and AI can help us reach and serve people we've never been able to reach before, they can also exclude. One biased loan officer can only affect so many people, but the effects of one biased algorithm can be exponential. For example, most fintechs use how you use your mobile phone as a proxy for are you likely to repay your loan. If you recharge and top up your phone regularly, you're probably more likely to repay your loan. That makes sense, except for one thing. When you scratch the surface, you realize that most men have their own phones and most women have the family phones. And so women's phones systematically run out of power and money, and we are creating algorithms that systematically discriminate against women. We need to do a much better job. And we're using historical data to train AI models. And just like facial recognition software has trouble recognizing black faces because it's trained exclusively on white faces, these credit models that we're building, they may not see good women borrowers. And if the developers themselves are all men, they may not think about women and their particular needs. Across the board here, algorithms are not just driving how we can reach the poor, but they're driving every aspect of our lives. We all, as a society, need to get much more sophisticated about the inherent potential for bias in algorithms. What can we do? How do we maximize the power of these amazing new tools and yet minimize their potential harm? We need to make sure that this digital revolution is inclusive and responsible and truly uplifts the most vulnerable people among us. There's so much knowledge and experience right here in this room, and we can start by just sharing what we know about what works and what doesn't. For example, in our work, we're being much more intentional about fostering financial health by design. With our partner, Banco Sol in Bolivia, we developed a gamified savings tool that rewards users for making regular deposits and maintaining a minimum balance. About 90% of the small enterprises said that this tool helped them with their financial health. Annapurna, here in India, serves a client base that is 99% women. During the pandemic, we helped develop a just-in-time emergency loan for their most vulnerable clients. By sending a simple text message, even clients with less advanced phones could immediately receive pre-approved funds, and over 90% said this helped them cover business expenses on time. These new products were developed through our partnership with MasterCard's Center for Inclusive Growth. The first 4 years of this partnership benefited nearly 13 million people, with 9 partners in 7 countries. We're digitally transforming established institutions to better serve individuals, families, and small businesses. And most exciting, we've seen huge spikes in 30-day usage, quadrupling the initial rates. This is real evidence that these small businesses are not only having access to these tools, but now they're really using these tools. And again, 80% of users reported improved financial health thanks to these digital solutions. This means being able to pay bills on time, having access to funds when they need them. And over the next few years, we're going to continue this work, and we're going to catalyze new capital, make new investments, and scale this progress to reach tens of millions more. Financial health and resilience have to be at the center of every step of this journey. From system-level regulations through product design and rollout, we must meet clients where they are. This means tackling their fears, building their skills, and expanding key infrastructure. And for many, human touch is still needed. Rather than rushing clients into the digital world, we need to apply the right balance of tech and touch. We need to really help people build their knowledge, their skills, their habits, and most importantly, we need to build trust. This is especially important when it comes to closing the gender gap. The financial system is undergoing seismic shifts, and we must urgently adapt our work. For example, let me highlight the revolution of embedded finance. It used to be that you had to go to a financial service provider to get financial services. But in the last few years, we've discovered that the key to unlocking financial services is all about data and data analytics. And every company today is a data company. And so almost every company has the potential to become a financial service provider. Fundamentally, for our organization and many in this room, this has the potential to change who we're working with, what we're doing when we work with them, and most importantly, who we can reach. Through embedded finance, data analytics, and AI, we can give customers exactly what they need, exactly when they need it. But we need to solve a whole new set of consumer protection challenges. These companies don't see themselves as financial service providers. Unlike microfinance institutions or fintech, they're not familiar with KYC, AML, or transparent pricing. And often they're not subject to regulation. All of this innovation builds on significant public investments in digital infrastructure. And as you've heard today, India has really shown us what's possible. Every one of us has a key role to play in building a more fair and inclusive and responsible financial system. Investors can scale the most promising business models for the underserved and ask the right questions to ensure that solutions are truly responsible. CFI, with support of USAID, for example, is developing an equitable AI toolkit for impact investors to help them minimize the bias that may be inherent in algorithms. And investors can apply gender strategies to address gaps at the customer level and internally. Business leaders need to prioritize the clients with fewer digital skills and create products that are specifically designed to improve their financial health. And digital innovators can think carefully about the impact of the new tools they are building. This means responsibly collecting demographic data on clients when possible and performing tests to see if algorithms are in fact discriminating. CFI is working to find new ways to embed consumer protection into financial services by design. And regulators must do their best to keep up with the pace of innovation, which is not easy to do. They need to address the risks created by digital lending and algorithms without stifling innovation. Regulatory technology can be a part of that solution. I know that's on the agenda for the next day and a half. Let me end by just saying the work that all of us do here has never been more important. And we have more powerful tools at our disposal to create a better, more resilient, more inclusive world than ever before. We need to seize this once-in-a-lifetime moment, and together we can help the most vulnerable build their resilience against the challenges of today and reap the benefits of the digital economy for tomorrow. Thank you all very much.